What if you won the lottery? 5 things you should do. Imagine winning the lottery. You'd probably be super excited. You can do everything that you've always wanted to do, such as travel the world, buy a big house, cars, and clothes, help family members, and contribute to your favorite charity. Or you could also invest it in real estate properties, stocks, or even something simpler like index funds. But you need a plan, or you could lose it all. Statistics show that 70% of all lottery winners end up broke within 5 years. So let's take a moment to examine how one might invest this unexpected windfall properly so it will last and become generational wealth for you and your family. Hi, and welcome back to another video of Finance Sense, where we cover all the latest trends in the financial markets and the economy. Before we begin, make sure to like this video, subscribe, and click on the notification bell to stay updated with our videos. Now, let's get to the video proper. Have you ever wondered how likely you are to win the Mega Millions lottery? Statistically speaking, your chances of winning the lottery are 1 in 302 million. According to statistics, you are 431 times more likely to get hit by lightning or die by an asteroid than win the lottery. Now, in order to understand what to do with such a large fortune in case you win, it's crucial to grasp why so many lottery winners go bankrupt. It is estimated that 1/3 of all lottery winners declare bankruptcy at some time after receiving their prizes, and 70% lose everything within a few years. Other research has revealed that lottery winners typically drift away from friends and family and are more likely to become addicted to drugs or alcohol, suffer from depression, or get divorced than the ordinary individual who hasn't won the lottery. So why does this occur? The kind of person that is most likely to purchase lottery tickets has very little financial or educational background, which is why they are doing so in the first place. This isn't to suggest that rich people don't play the lottery for leisure, but in California, it's estimated that 40% of lottery ticket buyers are jobless. And it's been said that more than half of all tickets were sold to persons with annual incomes in the lower 30%. Accordingly, if someone with very little financial education suddenly acquires $1 billion, it's possible that they don't have the financial acumen to handle it well. And then there's all of your friends and family begging for money, all or most of their risky investments, and all the expensive purchases you've always wanted to make but never had the money to afford. It's very simple to understand how this may rapidly transition from a dream to an unexpected disaster. So what can one possibly do to prevent all of these problems? First and foremost, you should inform no one unless you're attempting to fake it to get followers, in which case, you should tell everyone. In 2016, a guy by the name of Eric Briggs stated that he had won the $1 billion jackpot by uploading a photo of himself that had been photoshopped. Before it was discovered that it was photoshopped, he instantly acquired more than 50,000 followers. However, the actual winner ought to keep silent. Otherwise, you can find yourself in Bow Wow's situation in the movie Lottery Ticket, where he wins $300 million and has to get by for a week, while everyone knows he won a lot of money. So it goes without saying that you shouldn't tell anybody, post about it, or even mention it. Secondly, consult an attorney. In an effort to maintain their anonymity when they claim their reward, many lottery winners end up creating a blind trust that is owned by another trust held by a parent firm. Although it sounds completely counterintuitive, several states require you to go and publicly identify yourself when you claim your reward, which means that all of your information may be released, and sociopaths may go out and find you. In fact, a lottery winner from New Hampshire won her case and was able to keep her identity a secret while claiming her $5 million jackpot. Now, even though it would seem evident that you should have the option to stay anonymous, it's crucial to keep your identity a secret and refrain from publicly announcing your win. Third, make sure you take the lump sum. This is because your second choice is an annuity paid out over the next 29 years. When you consider the money you invest over in the long run, investing it all at once will always be more profitable than taking an annuity over 29 years. You will still come ahead by a wide margin even if you invest all the money in something as secure and simple as a treasury bond. The other factor to consider is how any changes in tax laws over the next 30 years can influence the annuity income you get. Locking in your tax rate now and paying your taxes upfront carries far less risk than taking a chance on tax rates rising over the next 29 years. Even though you'll wind up with less over the next 30 years, less of something is worth far more than more of nothing. Especially if you're the type who knows you'll just spend your money on yachts and other luxury items. Fourth, how can you invest all of this money to guarantee that you won't have to worry about it again for many decades and lifetimes? $900 million will be left over if you take the payout of $1.06 billion. Then, you'll have about half of that amount left over paying your federal and state taxes, or $450 million. The next thing you could do is invest $150 million in a low-cost Vanguard Total Stock Market Index Fund, exposing you to the entire U.S. market. And if you just spend 3% of this every year, it will provide a monthly income of $375,000 without ever having to touch the principal. In order to also purchase Vanguard, you can now invest an additional $150 million in a low-cost Total Bond Market Index Fund. Because at this stage, it's more about wealth preservation than it is about expanding money to crazy heights and incurring unnecessary risks. And this will provide you a very safe and consistent investment that you can rely on. According to Vanguard, the total yield on this bond index is 3.24% every year. If you follow the same procedure as previously mentioned and chose to spend 3%, you would get an additional $375,000 per month. Fifth, after spending $300 million, you may spend another $50 million on commercial triple net real estate in densely populated areas like Los Angeles, San Francisco, or New York. This may be accomplished by investing in shopping mall centers and office spaces on long-term triple net leases, which entails that the tenant is liable for the whole building's maintenance and upkeep. If you manage to secure long-term 20 or 30-year leases on these buildings, you should be able to earn 4% annually as a safe and reliable return on your investment. Additionally, you can use a significant portion of the real estate income and depreciation to write off a part of the income you'll be receiving from many other sources. Let's assume once again that you'll follow the same procedure as in the previous two scenarios. Spend 3% of your income and then save the remaining 1%. In this case, you will have an additional $125,000 in revenue per month. Then, with another $50 million, you could invest it mainly in apartment complexes in highly populated cities like Los Angeles, New York, and San Francisco that are safe for residential real estate. While still taking advantage of many of the tax benefits of real estate ownership, this provides you a little bit more diversification than commercial real estate. Similar to the last example, you can quickly get a net 4% return, spend just 3% of it, and again have an additional $125,000 in income per month. At this time, you would still have an additional $50 million in cash. Now that you have $40 million to spend on anything you like, you can keep $10 million in a cash reserve distributed among numerous banks across the globe. And you can spend the $40 million on anything you want, including luxury items, vacations, and cars. Additionally, your assets will continue to generate an annual income of $1 million without ever touching the principal. In order to avoid going bankrupt, you should be able to spend $40 million on whatever you choose, have $10 million available as a safety net, and earn $1 million every month for as many generations as you can imagine. It appears that we have reached the end of this video. Thank you for watching this far. Please subscribe and give a like if you enjoyed it, and comment your thoughts below. This is Finance Sense, helping you keep up with all the latest trends in the financial markets and the economy. Stay safe, and I'll see you on the next video.